Wall Street, we have a problem. What's up, everybody? Welcome aboard Bubba's Bottom Line. Todd Bubba Horowitz with you. And what's going on, everybody? Well, we had another week of gains in the stock market, and not a surprise, as we've seen we'll call him the wolf in sheep's clothing, go back into sheep's clothing. And of course, we've seen Chair Powell make a dramatic turnaround from being a realistic hawk and understanding the economy and understanding how the free market system works, and going into the system of being a dove and taking the easy route out and saying, hey, free money for everybody, let them eat cake, let's not have a problem. I can't take the pressure of the president picking on me. I can't take the pressure of Wall Street not going straight up every day. So let's just be dovish and make it easy for everybody, because why not, right? It's the free money system. So let's continue to devalue our currency. Let's continue to try to manipulate, and let's continue to try to make this work. And of course, as we know, and as we have said, that you can kick the can down the road so far until the road ends out and the bubble bursts. And I think this is just the creation and the start of a problem. I don't think that the battle in Washington is going to be the doom of the stock market, the doom of the economy. I mean, we've got the usual crap going on there. The only difference today is that this president is not going to succumb and is not looking to make any bad deals, and I happen to agree. And again, I think that you look at those on the left that continue to make up stories. I am neither right nor left. I am really a libertarian. I'm really down the center and have some agreement with both. But to me, this is just stupid and silly, watching these ridiculous battles go on. But I don't think that will have any effect on the equity markets. Equity markets are an animal of their own. And of course, we can see how they have had some dramatic swings, and we've had a little bit of a rally here. And of course, the rally will continue until it doesn't. Now, it is reaching some of those key levels we were talking about, which we'll talk about later. But again, we're not carte blanche saying that it's time that the markets are going down. But I would say that Wall Street, we do have a problem, and that would be we continue to ignore the simple fact of the massive amount of debts being created. You know, if you just go back just 10 years ago with the housing crisis and the housing bubble, I think you're seeing a lot of the same steps repeated. I will say this for, I don't know, maybe the 1,000th time this year, is I believe that the banks are once again over-leveraged. I believe the banks are totally out of control once again. Now, again, you can argue the fact, and you can state your opinion. I have no problem with that, because, of course, other than what some believe, that right to me, that this is not a free, do not have a First Amendment right, we can't express our opinion. Actually, we do. Okay, so if you disagree, that's great. I have no problem with that, but I think what we're seeing here is the usual. Okay, that we have so much exuberance, and we've had the banks are making so much money that they can't stand it, and they want to continue to create these illusionary tales of crap that they actually can support this overall this massive amount of debt, and the massive amount of debt that they're creating. Of course, when they do have, the Federal Reserve behind them, okay, that will come in bailing them out at any time, I think that becomes the problem. And I think this is a very serious issue that I think we should all be thinking about, is why is the banking industry the one industry that has the full faith and backing of the Federal Reserve? Okay, why aren't banks allowed to go out of business? At least not the big ones. Are they that imperative to making the system work? I think they are more the death of the system with the way that they do business. As I've said before, and this part's a fact, okay, is that banks are buying up loans as if they were free and if they could never default again. So we're going into the same position that we were in many times in history, Okay, and of course, the asset prices cannot continue to keep up with the rate of what you're trying to lend here. And this is going to be, once again, another reason for the major meltdown, which you will have and we continue to have. And as long as you have a dovish, free printing, free money Fed with people that only understand theory, you're going to have these problems remaining. And again, I did think Chair Powell was somebody who was a free thinker and actually came out of the industry and understood. But I guess the doves wear you down until you become a dove. There is no other excuse and no other reason to believe that they are going to be able to fix the problem and the mess that they created. Because what we have here is a mess. What you have here is massive amounts of debt that eventually we will have to pay the piper. You're already seeing a pretty solid recession in the Eurozone, and it's only going to get worse. And if you don't think that we will not have a recession, okay, and I would not be surprised, I would say it's 50-50 that we have a recession this year. There is not one economist out there that even thinks to utter the word of a recession. Of course, the idiocy of the economists is that 10 years from now, they'll look back and say, oh yeah, in the year of 2019, when the market melted down, we had a recession. So again, they will never be able to come up with it because they're using A, antiquated facts and figures, B, only something that is done in school books. It's kind of like moot court, right? That works real well in the courtroom. Well, old style economies and economics do not work. You have to be able to adjust on the run and adjust to the current conditions. And right now, the current conditions is too many people have their entire net worth related to the stock market. Now, just to be clear, I am a believer in the stock market over the long run. But the amount of wealth, you hear about how much wealth has been created. Okay, well, it's been more created on the amount of debt that has been created, which then gives the appearance of being wealthier, and you're going to have another meltdown, as we have had. Again, these are not unusual. It's something that if you ever come to one of my classes, we talk about that the improbable happens once a week and the impossible happens once a month. So again, there's nothing to believe that there will not be another meltdown. You cannot continue to create free money trying to get past and kick the can down the road. You've already seen inflation, which nobody will admit to that we're seeing inflation. Just have you been to a restaurant lately? Have you seen the cost of food? Have you seen the rapid rise in the cost of dining out? Now, it's interesting that we should have such a dramatic rise at the retail level, but at the wholesale level, prices are still rather skinny and rather low. And being brought back into, well, the trade wars are hurting us. Where are the trade wars hurting us right now? Okay, where are we seeing all these extra costs? In my opinion, again, I will give you my opinion, the trade war is a crock. The trade war is simply gives big companies, okay, a reason to raise prices, okay, without having to answer for their action, okay, because there has not been a major shift in what cost of goods are. That's an imaginary story right now. Again, if you look at prices, okay, at the trading level, they are rising because there is demand. Okay, so you have to look at this whole situation and realize what a crock of crap we're being dealt out. And this comes back to the politicians and the lobbyists that are not getting their take, you know, their little free cash that they get for making these very, very bad deals. But again, I urge you to look at the price and compare prices when you go out to dinner, and you will see that we're seeing much higher prices. Okay, so the only thing that is helping some of the inflation is the falling of oil prices right now, but other things are starting to rise in cost. And again, I ask you the question, what's going to happen when all these credit card bills start coming due from the Christmas season? Okay, you are starting to see there is some weakness in a lot of the retailers as they chirped them up during the holiday season, we're now finding out that maybe things weren't quite as good as we thought they were going to be. So I think you tie that in, and then you add into all of these things that are not really that great, okay? And you have the no bearish forecast for 2019. Now we're going to talk about more of this in my commentary, but not one major analyst out there is offering any bearish sentiment, okay? So when you look at that, okay, how can that be that not one economist, not one bank, nobody can see that there's a potential for any problems, okay? And of course, you know, we look at what's going on, and I urge you to check out when we have all these backed shares, these buybacks from all these companies that we're buying, that were propelling and fueling the market, okay? But all of these buybacks, it looks like they've just turned into collateralized debt obligations, or known as CDOs. And of course, where is all the money going to come when these debts are going to have to be paid? I think that is the issue that, again, we want to forget about it. Everybody wants to close their eyes and say it doesn't matter, it's not a problem, because we've got the Fed, we've got Jerome Powell, the Fed chair, who caved in to the pressure of Wall Street. And of course, that puts us into a position where we say, Wall Street, we got a problem. And I think that the problem is only growing. I think you're looking at some major issues. And again, it doesn't mean that we're going to fall tomorrow. I don't want anybody to be afraid. Okay, I'm telling you that simply that there's a problem out there. And the more people want to ignore it, the more people want to cover their eyes and say there is no problem, it only makes the problem bigger. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be back with more after the break. Bubba's Bottom Line. Hey, everybody. Remember, if you'd like to help us with our high school program, you can help us at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Also, don't forget, if you'd like to get a copy of the free book, Gold is a Better Way, from our good friend Adam Barata of Advantage Gold, all you have to do is go to BubbaTrading.com/gold. He'll send you a free hard copy book, and you're on your way to understanding why gold is a better way. And we are fans of gold. But in the meantime, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, last week, well, I guess they could say you kind of blacked the card. You know, almost like a great bowler, bowled the 300 game. The markets were up almost every day last week, and we now have rallied about 10% from the bottom. But of course, if you listen to Bubba's daily update all week last week, we said we're not interested in selling this market until at least we see 2,600 in the S&P. Well, we're right there on the precipice here at 25.95. We got up to 25.99.50. So we want to see the action around here. But we will be looking to potentially sell. Now, again, for those of you who follow me and subscribe to me, you know that our algorithms are still long here, so we're not jumping in and saying, sell, 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 okay? We are just saying that we are now seeing a reason that it may be time to start looking for opportunities to sell, because that is where we are within the overall market dynamics right now. We have reached the resistance levels, so we will look to be potential sellers, but we're not going to rush in. Again, remember always the mantra of all of my stuff is, it's better to wish you were in a trade than to wish you were not. So what we'll see is how this plays from here, but we are more looking now to take off some of our longs and now go to the short side of the market. We have been a proponent of selling rallies, but we did warn that we wanted to see at least 2,600 before wanting to sell here. So here we are. We'll see what happens. In the meantime, oil was up 9 days in a row before having a little bit of a down day on Friday. We are sellers we are still bearish oil. We still think that the high 30s come into play, but we will not be surprised, and we will be sellers at around the $55 level. Again, you've got, here again, we find a little bit of manipulation, a little bit of things going on, trying to keep prices down. But I believe that you're going to see that this was nothing more than a true dead cat bounce and a short squeeze. So we'll see and look for an opportunity to sell there. Gold remains in perfect formation as we have been buying gold since 1180. Our new support now is 1280, and we seem to be in a great consolidation range between 1280 and 1300. And I think that we'll probably see in the next week or so a breakout above that 1300 as we try to target to our next target of 1340. Below 1280, we'd have to evaluate and think that maybe we might be now wrong and this rally might be over. But of course, we don't think so. We think that gold is certainly going higher this year. We think it's going to be a big year for the metals in general. And again, it's not a $5,000 level. I think you could see potentially this year 1340, then possibly the next target of 1400 as we start to move forward. I think silver has got a good chance to see the $20 level this year. So we'll continue to watch and look for those. You had the bond markets, which is the interest rate market, which is the most interesting market right now, most interesting man in the world. Well, the most interesting market right now is the bond market. And that is because it appears to me that the bond traders, which, by the way, if you're not familiar, the fixed income, the bond market is the biggest market in the world by at least 10 to 15 times. Okay, at least. Okay. And it appears to me that the fixed income traders and the bond traders, which are big enough to compete with the Federal Reserve and the central banks around the world, want rates to go higher. And I think we're going to see the bond futures, which spiked up to 148, forced us to puke, but then allowed us to get back in again. Okay. But again, I think you're going to see those now start to collapse and come much lower. We are still sellers of bond futures, and because bond futures going down, interest rates means they're going higher. And again, we have said this, unfortunately, for months, but the key here is going to be the sudden rise of interest rates that comes back to those CDOs that collateralize debt obligations, to the massive amount of debts that are being held, which will end up being the meltdown and the cause of this sell-off that is coming. Now, again, when is it coming? I cannot say with a certainty. I can only give you the levels that we're watching today, because one thing I want you to remember is when we look at the markets, I don't make dramatic long-term calls, like gold 5,000, oil 100, those ridiculous, stupid calls, okay, that create action among the unsuspecting. I look at them one level at a time, okay? So again, we're looking at these levels to see if this is the area that we're going to break from, and we will go from there. In the meantime, the grains, after being up last week, 2 weeks ago, were down last week, but they held their patterns beautifully, okay? And they look to me as all they are is opportunities to buy. I think you can look at soybeans at $9. I think you can look at corn at $3.75. I think you can look at wheat at $5.10. I think those are all great levels again. And again, I think if you look at my initial thesis, which is I think equities are going to sell, which will bring new money to the grains anyways, I think that you look at, if there was truly a concern about the trade wars and all the other stuff, then these grains would be on their lows, not making higher lows, looking like they want to charge higher. And of course, the meats have pushed higher, especially what they call fat cattle or live cattle, which has now made new recent highs again. I would not be surprised to see a little bit of selling coming in here. But again, we're looking for opportunities to buy hogs, feeders, and fats, because again, we believe that they're going higher, and we believe that they have held their patterns terrific and look like they want to go higher. And I think that that's the exact thing you want to see. Remember, if you go back just in history to a little bit to 2008, and one of the keys of understanding that the markets were coming to an end is they could no longer go higher. Okay, so when a market can no longer go higher, you assume that it's getting ready to turn over. Now, it doesn't mean it will turn over today, but it's getting ready. Well, in the grain markets, they could no longer go lower. The meat markets, they could no longer go lower, so they're starting to move higher, which again pushes us to believe that we're going to see much higher and much better prices. So, and part of the theory ties into the overall markets. And of course, you look at a lot of things that are going on, and that creates a problem. And of course, we've seen some issues with the cryptos, but they're still holding in those great areas. Okay, yes, they're down a lot. Okay, again, we're not making excuses. And of course, again, we tell you that we wouldn't put our life savings in the crypto world, but we would certainly be slightly invested, which we are. Okay, But I think you see this, more of this when the Fed becomes more manipulative, and I think that's what you've seen over the last few weeks. Okay, again, you've got Chair Powell making a dramatic shift, you call it a 180, right? Hawkish to dovish. He brings out his hench people, Yellen and Bernanke to talk about how dovish they are the market. Again, he's lost his direction of actually being a true understander of the markets and has gone into this dovish thing. Well, all that's telling us is that things are getting ready to change. Okay, and this, when you tie in the Mnuchin telling the banks and that everything's okay, and you get a couple of banks saying we're prepared for a big crisis, what they're telling you, they're giving you a message. Okay, it's very much like a footprint in the market. They're saying to you that there is trouble out there. Okay, we can ignore it all we want. Again, unfortunately, we as a society like to ignore a lot of problems as long as we feel that we're making money, as long as we're being able to build more debt, as long as we're able to do all these things. Why should I worry? Okay, that is what all of these pundits and other things play on when you hear from them, and we'll get excuse me, we'll get in there when we get to our commentary. In the meantime, as we have written about for many years, the hidden cities in China and the house of cards of the Chinese real estate, well, it is now starting to play out very dramatically, and of course, this is one of the reasons that their markets are collapsing, and you can assume that those markets will collapse even further. Okay, so you can assume that the problems are not over in China. The problems are not over in the Eurozone. The problems are only coming to Wall Street, in our opinion. And this is, as you remember the words, Houston, we have a problem. Well, I say Wall Street economy, we have a problem. Now, again, I'm not predicting devastation for tomorrow. I'm not telling you, I cannot tell you, because I would be, as they say, a schmuck to tell you that I knew when it was going to happen. But you can certainly see a lot of the changes in what are happening in some of the markets. You can certainly see some of the issues that are out there, and you can certainly see that the borrowers who fueled this market and the CDOs, the collateralized debt obligations that have been made to fuel this big rally, are starting to run awfully thin. So if you keep an eye on that, you might see a reason of why this is going to happen. And when I come back with my commentary, I think you'll find out more reasons why we are coming towards the end of this run. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We'll be back with my commentary after this break. Hey everybody, if you would like to get a copy of the book, Gold is a Better Way, from our friend Adam Barata of Advantage Gold, you can do so by going to bubbatrading.com/gold. In the meantime, if you want to help us with our high school investing program, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And we will get back to Bubba's Bottom Line right now. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz. It's time for my commentary. And today I've got a little bit of a potpourri of complaints and other things, and what I like to call my own bitches. Okay, because I do like to bitch, and I've got a number for you. So let's begin. If you look at the cheerleading, we'll call them the cheerleading pundits. Okay, that know nothing from a market and know nothing that the markets actually have the possibility that they could go down again. And I think if you watch enough of their BS, okay, on the major networks, they continue to chirp up and cheerlead the markets like they're never going to go down again. Now, we all know that through normal cycles, markets go up and markets go down. You cannot continue to cheerlead the markets. But I think between that and all of the email paraphernalia you get out there of the promises of billions of dollars, okay, everybody making the overall, get rich quick schemes and all these other things. I think that you can see by the number of emails you're getting now about everybody now positive. It wasn't more than 6 months ago where the fear mongers were out banging you on the head. Oh, you got to do this, fear. And all it is the fear of them not getting your credit card so they can charge you something. Okay. Well, now you've got the opposite of that, and you've got everybody pushing the markets bullish, 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 buy, buy, buy. Again, another way to get into your pockets. And again, I say this to all of you, okay? No matter how you invest your money, no matter who you invest your money with, I urge you to understand the investment that you're making and who is doing your investing for you and what their cost is to make that happen for you. Again, most people get their general news from the pundits, and I say this, the pundits, like the same in politics, the same everywhere else, most have an angle to say one side or the other. I'm saying to you that make sure you understand before you act. Understand that whatever news you hear on TV, on the radio, is already priced in to the market. If you believe that you are ahead of the news, you are wrong. By the time you hear the news, assume in your mind that 1 million people have already acted on that news and have already heard it. Okay, so stay away from all that sharp talk of convincing you, because remember, the people that you are hearing on air are either people that are looking to get commission or get you to buy something from them, and they need you to be in the market to make their money. Okay, it is not necessarily with your best interest at heart. So I always warn that you put yourself in a position to make sure you understand the investment that you are making. Okay, because again, I want you to understand the markets and how the markets work before you directly invest aggressively, because I don't want to see anybody have to go through the 2008 or 2001 or 1987 portion again. Last thing is I do believe in the First Amendment. I do believe in freedom of speech. And if you don't agree with my speech, that's fine. But don't be critical of because you don't agree with my opinion. You're entitled to your opinion. I'm entitled to my opinion. And I'm not interested in battling with anybody through the chats that come through on the commentary section. Okay? Again, I'm not interested. You have your opinion. I have my opinion. Fortunately, I get to express my opinion, and you can express yours to all who you want, but I'm not interested in you telling me that I'm wrong. Okay, you can say you don't agree with my opinion, but please don't put this into that you know the answer and that I don't. You have an opinion. I have an opinion. That's the way it should be. Have a great day, everybody. This is Bubba's Bottom Line. Enjoy your weekend. We got 2 football games today. We will take the the Los Angeles Chargers, and we will take the Philadelphia Eagles. Have a great weekend, everybody. This is Bubba's Bottom Line. We'll see you tomorrow with Bubba's Daily Update. Take care, everybody.